Alrighty. We are going to be backtesting November the 1st, 2022. This is for the WHI trading models, EM1, EM2, and EM3. So first things first, let's check out the news. We see November the 1st, 10 a.m. Eastern, we had ISM manufacturing PMI and JOLTS job openings. So those are two red news areas. Now let's go back to our charts. Let's load up. Let's start off with ES. Let's go to ES Z 2022. And then let's also load up NQZ 2022. Okay, let's clear all these drawings. Starting off with ES, let's go back to November the 1st. Now, I do start the trading day at 8 a.m. Eastern, and I end at 4 p.m., so that's definitely something to note there. Let's just replay that back in time, do the same thing for NASDAQ. Okay. Alrighty, so let's mark up the news times that we have. So we know at 10 a.m. is we have some red news. We want to have at least a 15-minute buffer in advance. So those are the times that we don't want to trade. Now, we want to look for previous day highs and lows. So the day is Tuesday. So let's see, Monday high is there. We can already see that we did sweep the previous day high on ES. So knowing that, we are going to move to either the EM2 or the EM3 models. So the way it works, the trading plan is as follows. We identify news. We check if the daily liquidity has been swept. If it has been, we can look for EM2 or EM3. If it has not been, we're going to be looking for an EM1 model, either variance 1 or 2. So let's do the same for NASDAQ quickly, because we want to make sure that our bias for both of the assets is aligned, just because we don't want to be risking any capital if we don't need to. So let's point this here. Okay, so we're aligned in that sense. We're looking for either looking for an EM3, which will essentially bounce off of a discount array and continue upwards to follow the daily trend of a bullish bias. Or what could happen instead is we maybe move up a little bit more, consolidate a bit, we break structure, and then we can take a short as like a daily retracement towards a previous session low. So let's mark out the previous session lows here on ES, because if we're taking an EM2, we're going to be trading in the direction of the previous session lows. We also want to take note of where the discount arrays are. We only look for discount session arrays, as those are going to be the strongest. So we can actually see here already during that London session, we broke the daily high, we came back down, we came up, we tested that discount set array, and then we broke structure. So this right here is already kind of continuing the trend. Kind of looks like we're going to be following a very similar pattern here on NASDAQ. So with that being said, I'm just going to be looking for shorts for the whole day as like a retracement. So now we have our targets there on ES. Let's mark our targets here on NASDAQ. Now keep in mind, we don't exactly trade all the way to those session lows. I kind of just use it as like a draw on liquidity. The reason why I do that is simply because sometimes, it's just not worth the risk. I have a fixed TP of 3R. That may fluctuate to 4R or 2R depending on a couple of variables, but for now, let's just stick with the 3R that I have set. So now we want to go down to the 10-minute time frame, and we want to look for a bearish 10-minute market structure shift. So the next bearish market structure shift is going to be here. And then let's do the same for NASDAQ. Okay, let's play it out. Okay, it looks like we had the bearish market structure shift right before news, which is no problem. We don't want to be executing any trades at news. We want to wait at least like 5-10 minutes after news to execute trades. So if the entry comes up before 10:10, 10 minutes after the news, we are not going to be taking that entry. Okay. Actually, we can see here that all of our targets have been swept, both previous session lows, and it's even going towards the previous day low. Wow. Okay, so very volatile day. We took out the daily high and the daily low. So now we have no EM1, we had no EM3, we had no EM2, so there's going to be no entry opportunities for Tuesday on ES. Let's see if that's the case on NASDAQ. Okay, well, that is the same thing for NASDAQ. So with that being said, no trades for Tuesday, November the 1st. So let's move forward to Wednesday. Okay, let's check the news. Wednesday we have NFE and we have FOMC. That's pretty shitty, I can't lie. So if we're going to be taking any trades on NFP, we ideally want to cut the risk down in half. And we're also not going to be looking for a trade until 8:30 because of FOMC as well. I'm going to stop trading by lunch, so we're just going to be trading the AM session on Wednesday. So let's mark up our daily highs and daily lows. Okay. Let's see. Okay. We are closer to the previous day low, so we are going to be looking for a sell. That's the bias here on ES. I'll mark up this as well. So two scenarios that can happen here. Scenario 2 is kind of rare, but the more common scenario is we sweep a previous session high. For this case, at least, we'll sweep the previous session high, which occurred right here. Then we'll break structure. We'll mitigate a 5-minute order block, and then we'll trade towards the previous day low. Now, the other scenario that happens occasionally, but not too often, is instead we will break structure. We'll continue up. We'll return to this area here, which is a discount array premium. So it's a discount array for the session. And then we have a 10-minute break of structure here. And then we would actually be looking for a buy towards the previous day high. Doesn't happen too often, but it does happen sometimes. Now let's take a look at NASDAQ here. And yeah, I definitely do apologize. I'm super tired, so I'm definitely going to be stumbling on my words a little bit. But we are not going to be missing any backtesting sessions. Okay, previous day high, previous day low. Same scenario. So the bias is aligned for both instruments. We are looking for sells until or unless we have a reaction off of a discount array. Okay, let's make a note of news times. We will start trading at 8:30. We can mark up 8:24 for now, and then we're gonna stop by 1:30, give or take. So let's go down to the 10-minute time frame. We can see that we already had the session high swept here. So in this case, because we had the session high swept already, we could be looking for an order block here. But the thing is, because NFE is right around the corner, we just don't really know what's going to happen. So we have to let it go by first. Let's see, what time was it at? It was at 8:15. Okay, 8:15, 8:50. Okay, in this case right here, honestly, the market is a little bit choppy. Like, we just keep having these breaks of structure. Originally, if it wasn't NFE, we could be looking for an entry in one of these areas here. But there's a clear reason why we didn't, right? Because this may have been an order block, and look, it got swept right before NFE. And we keep having these breaks of structure slowly towards the previous day low. So at least for ES, I would honestly want that previous day low swept first. So I wouldn't even be looking for an EM1 at this case anymore. Now that that was swept, what we are going to be looking for now on ES is either a EM3 to continue shorting or a reversal with a EM2. But first, we want to see what happens with NASDAQ. Let's mark up our news times, go down to the 10-minute time frame. We'll start trading at 8:40, and then we'll stop at 1:30. Okay. EM1 criteria, we swapped previous session high. We're looking for a 10-minute market structure shift. However, we were not going to start trading until 8:40. So pretty much if any setup occurs here until 8:40, it's just going to be invalid. Okay. Same scenario, very choppy market. So because of that reason, I'm going to wait for the previous day low to get swept first. There we go. It got swept. Now we're going to hop back onto ES here. We either want to see one of these two things occur. The market maybe goes down a little bit. It can retrace to either this point and have a strong reaction, or this point and have a strong reaction, have a break of structure, and then we can take an entry at an order block and continue downwards. However, the more likely scenario is just going to be a reversal. Let's see what occurs here. Okay, well, anyways, we stopped our clock here at 1:30. So we're not going to be taking any entries just because FOMC is coming up, and that's just not something that we are going to be trading simply because it is risky. But just for educational purposes, we can see what occurs here. This would be a 10-minute bullish market structure shift, which would be good for our EM2 model. Oh, it actually looked like it would have worked perfectly. But anyways, it's FOMC, so it's definitely very risky. If we were taking an EM2 buy there, we had the 10-minute market structure shift right there. We're on the 5-minute time frame. We go from the low to the high of the candle that broke structure. We can see that the candle body is above both of those red lines on the fib tool, therefore meeting the strength criteria for a valid market structure shift. We draw our order block, which is found right there. We would take the entry here. Now, because it is ES and the pips is below 30, we can take this for a 4R rather than our traditional 3. And we can see here that FOMC, it would have worked out, but it's just not something we're trading. So, okay, well, that would end the day right there for ES. I'm going to assume it's going to be the same scenario for NASDAQ, but who knows? Okay, we swept the low. We came back up. Swept the low. We came back up. Reacted off of the previous session low. Let's see if this is a valid break of structure. It is a valid break of structure. Okay, this could work actually for an EM3 model. So just to go back in time to really show you exactly what happened here. Let's delete this line. We don't need it. Clear all the indicators. Okay, so we swept. Oh, that's the wrong tool. Okay. Okay, we swept the previous day low, which happened right here. And then market returned up into that premium session array, which is just a old previous session low. Market came down and it had a 10-minute break of structure. Now we'd be looking to enter a quick sell off of that 5-minute order block. So which would be our 5-minute order block? It would be this one right here. So we'll place our entry right there. Now, because the stop loss exceeds 100 ticks, we are only going to be taking this trade for 2R, which honestly I'm more comfortable with. And there we go. We have a full TP on NASDAQ for an EM3 model trade. Let's quickly journal this entry here. Okay. Just taking one more quick look at it again. We swept the previous day low. Market returned up to this premium array. Market came back down, broke structure with a proper candle break. We have this 5-minute order block that we returned to. We only aimed for a 2R take profit because on NASDAQ specifically, the stop loss was over 100 ticks. So we are reducing the stop loss, the take profit from 2R, from 3R to 2R. So nice. Okay, at least we got that one win for the day. This is good enough for me. Now, the nice thing is that if EM1 occurs and then we're looking for EM2 or EM3, in this case, if we didn't have FOMC, we had this win here. I can still look for EM2 because it's simply just a reversal trade. But if EM2 occurred, we can't have an EM3 because the logic behind it is EM3 is supposed to be like a continuation of the daily trend, right? Why am I saying daily trend? Because we're taking out daily liquidity, right? That's really what matters in the intraday is the daily liquidity and session liquidity. All these other swing highs and lows, they're meaningless. It's the session liquidity and daily liquidity. That's all I care. You know, I take these quick scalps here. That's all I care about. So we have that journaled in. Let's just continue on. Yeah, I mean, I guess for educational purposes, again, if we're looking for EM3, this would have been a break of structure right there, making this up here the next swing high for us. So 10 minutes, and then if we go to the 5-minute chart, we go see the candle that broke structure. Now, it did not meet the criteria for a proper candle break. However, which I'm glad this actually came up, if the next candle breaks above those two lines, then it is still a valid continuation break is what I call it. So now what we want to do, again, this is not an official trade because it's FOMC. It's just for learning purposes. We draw out our order block there. We take our tool. Now let's see. This is NASDAQ. Is our stop loss above 100 ticks? Yes, it is, 106. So we're only going to be aiming for a 2R target. And there's a very good example, especially on NASDAQ, because we would have just got swept instantly and then it would have just flown away. NASDAQ loves to sweep liquidity, not as much as Dow does, which is the reason why we don't trade Dow anymore. But that is what happens sometimes, right? So anyways, that's it for Wednesday. Let's continue on here to Thursday. Let's take a look at Thursday's news. So we have ISM services PMI at 10 a.m. And then we have unemployment claims at 8:30. Unemployment claims I'm not too stressed about, but still something to keep note of, so we will do so. Okay. Ooh, okay. I'm liking what I'm seeing. Okay. Where was our previous day low and previous day high? Previous day high is up here. Definitely not reaching that anytime soon. And previous day low was right there. So immediately when I see this occur, it almost looks like what I call a Tokyo London reversal, which means our main target would be this up here. Let's just mark it up like that. That would be my primary target for the day. And then we can kind of see a similar situation, almost exactly alike actually, here on ES. So my primary target for the day is going to be this high. The bias is aligned, which is nice. We still want to mark up all of our session highs here. Now, as long as these premium arrays haven't been tagged, it's possible we can still take a EM3 trade. So that's something that we just need to keep in mind. But for now, if I get that bullish 10-minute market structure shift, I'm taking that. The only case a EM2 model is invalidated is if we have that market structure shift and then we still react off of the premium array. If you see that reaction before an entry or even during an entry, just put break even or just delete your order. So let's go to the 10-minute time frame. Let's take a look at what's happening. Okay. So damn. Shit's really just dropping like that, eh? Oh, yes. Okay, this is still... Oof. You know what? That's actually my fault. Okay. Okay, so this is still a valid premium array. It is a very small one, but it's still valid. We do want to mark these up. Okay, so we go in the 10-minute. We add a break of structure here. If we have at least a little range here, this will be the low we need to take out for another market structure shift. Okay, if we go down to our 5-minute time frame now, we can see that this is our 10-minute break of structure. So this would be a valid sell that we can take from this order block. Now this is considered a risky trade considering that we've just been bearish for like the longest time. So we are going to be taking a half risk here. Me personally, on my account, I risk 0.5 on anything. So half risk for me is going to be 0.25. And something that I always like bringing up to people is if you had $1 million account, why would you risk anything more than 0.5, right? So you need to think long term here. So let's see, our stop loss is under 30. So we can aim for 4R, but because of how risky this trade is, I'm just going to be aiming for 3R. Let's see what occurs here. Okay, so the trade was a win. So this is the first win that we have. We want to just take note of the news again. News occurs at 10 a.m. So as long as we don't enter the trade before news, that's completely okay. Because honestly, I forgot to drop the news here, but that's okay. And our entry was after 8:30. 8:30 was unemployment claim, so this is a completely valid trade. As we are not at all trading during news. We're kind of like, using that to our advantage. We just don't want to be executing trades before news. That's just the point. So we're just gonna journal this entry here really quickly. So this is the previous session low that we had. Now this is kind of nice because it's making that EM2 entry later on look even better. So that's really cool. I guess if we still took that 4R, it just would have been beautiful, but it's okay. I'm happy with 3R. Okay. There we go. 2 wins so far. Okay. Now let's see what's happening with ES. Anyways, if we want to be looking for EM2, remember we want to look for a break of structure. We can disregard this premium array because it just doesn't matter anymore. We'll come back to NASDAQ actually. The bias is aligned, so that's kind of all that matters. Okay, we're on the 5-minute time frame. This is a 10-minute swing high. Let's use our fib tool. We go from the low of the candle that broke structure to the high. Is the candle body closed above the 2 red lines? Yes, it is. So this is a strong bullish market structure shift. Now we want to draw out a discount order block. This could, be a propulsion block, which it kind of looks like it is, but I could care less about that in this situation. So we just want to draw it up to the low of the order block. Now we can see that our stop loss is above 30 ticks, so we're only going to be targeting 3R. Now let's see, is it aligned with our target? Tokyo London reversal, previous session high. Yes, it is. So this is a very valid entry. Let's see what happens. Okay, we just barely tagged that and we're in the trade. Let's see. Okay, this trade actually looked like it would have been break even. Damn, that's so unfortunate. It happens though. Now, something to keep in mind is that once we are in a trade, we want to keep in mind where is the next 10-minute break of structure. So that's going to be right here. The second that this 10-minute break of structure occurs, the trade is officially break even. Like, I just don't care. Now, the reason we do that is because we want to be avoiding the possibility of like a liquidity sweep and then just a reversal. But nonetheless, no matter what, if it's 4 p.m. Eastern, if the trade's in profit, loss, whatever, I don't care. I'm closing the trade. So this would have been a break-even trade. So let's just journal that quickly. This is an EM2 break-even. It looked like the market kind of just died down, really. Okay, let's see. What was the stop loss size? 47. Damn, I don't get too many break-evens. That's actually kind of interesting that we got that today. Normally it's just like win or just no entry, which honestly the no entry kind of hurts more, but you know, I honestly like having a loss is a little bit better, in my opinion, than just no entry really, but especially when it goes to target. So that ends. That's the end of the day for ES. Now let's take a look at Nasdaq here quickly. We have our session low. So our session low is, pretty tight, but it's still there. So let's see if we can catch an EM3. Okay, we tagged our session low. So what we want to see happen is we want it to have a strong break below here. If it doesn't have that, and instead we just break this high here, we're looking for an EM2 buy. So either or could happen in this case. We don't know. Now let's go on the 5-minute time frame. Okay. We can see that we had our 10-minute break of structure. So now we want to enter off of the order block. Click, well, just to show you again, is the candle that broke structure strong? Is it meeting the strength tool criteria? The candle body broke below both of the red lines, which the red lines is simply a 40 and 60% on your fib tool. The answer is yes. So this is a strong market structure shift. So now we want to enter off of the nearest 5-minute order block, which is right there. Let's see, we want to take a look at the stop loss size here. The stop loss size is under 100 ticks, so we can aim for 3R. Let's see what happened there. 9:30. Oh, that was the open of New York Stock Exchange. Damn. Well, that's okay. That happens. But nonetheless, this is a valid loss, even though it went straight to target. It happens. I do not care. It's what happens. Let's see. Okay, EM3, Nasdaq, 1R, risk 0.5, AM session. This was 95. Awesome. Honestly, very happy with that loss. Kind of sucks that, but whatever. Cool. Okay. Now, where is the next swing high that we need for a 10-minute market structure shift for our buy? It's going to be right here. Okay. We're supposed to be looking for these breaks on the 5-minute time frame, so that's my bad. There we go. Let's see. The candle body, did it break structure and break these two red lines? Yes. Valid structure shift. Now, this is definitely an arguable area for an order block, so I want to go on the 8-minute to see something more clearly. So I'm liking this order block here the most, even though ideally this is an extreme order block, but this order block here is more likely to be the one that works out. So that's the one we're going to set our limit to. Okay. Our stop loss is above 100 ticks, so we're going to be taking a 2R take profit. We don't want to exceed a stop loss of 200 because then the take profit is just going to be too large. So that's not something we're willing to do. So we're just going to take 2R. Okay. Let's see what happens. It went to the extreme block. Damn. Okay. Well, pretty much here, sometimes, the extreme order blocks do work out a lot better. However, it's just really something that I didn't see in the other time frame, so it just seemed more probable if we took the other order block. But if we did take the extreme order block, that would have been a 2R. Honestly, I would have taken this one here, even though it was technically a propulsion, but nonetheless, still okay. I will write down both of these. I am just journaling this for my own for my own reasons, but I am not counting this as a win because I would not have entered off of that block. This was a very volatile day though. Let's see. Would have been Nasdaq, and then that would have been no entry. 0.5. 135. So yeah, that's definitely something to always consider. Generally, we do want to take an extreme order block just to avoid any problems. But you know, it's all good. That's something we can just take note for the future. So overall with the day, it looks like we would be closing off with 1R just because of those two losses. But if we did enter at that extreme order block, we would have closed the day with 5R. So definitely big differences there. That is the end for the day. So let's just remove our drawings and then we can take a look at the final day. Friday, I only trade the AM sessions and it's NFE. So that for me is already a no-brainer not to take any trades. So now if we want to take a look at the total R for the week, let's see, we got 3R there. We got another 3R. So that's 6, 5, 4. So that would be plus 4R for the week. If we did take the extreme order block, well, there you go. You would have just add another 3 instead. So we would have closed off at what, 5, 6, 7, what, 7R for the week. Overall, it's not that bad for November. But anyways, yeah, that's going to be it for this video.